Good afternoon and welcome to a special pre-Chinese New Year edition of BizTech's ASEAN Midday Market Watch. Our guest today is Vishnu Varathan, Head of Economics and Strategy at Mizuho Bank in Singapore. Hey Vishnu, great to have you on the show again.
Thank you, Brian. Always good to be here. Thanks for having me.
Now Vishnu, let's start with China. Now China's policy calibration, given January's credit data is strong despite reining in liquidity. Now, what is your view on the PBOC's direction? Because it seems to be a shift again back from their December direction.
I think that's where the PBOC stands out, and it's two things at the same time, if we may allow that. On one hand, it's a very nuanced tool. So the PBOC is deliberately using an entire suite of policy tools to ensure that they get that Goldilocks policy, so to speak. So the good thing is that they are very targeted, very nuanced. The backlash from it could be we don't understand it well enough, so markets could react in a way
That's right.
that PBOC doesn't want us to. So I'll tell you what they're trying to do. So what they're trying to do is they're trying to rein in excessive liquidity overall, because this liquidity is hard to control. And it's causing some frothiness in the markets, be it equity markets or the property market in particular. So they are worried, they're reining that in. But we've seen credit growth being very strong because the PBOC, unlike many other countries, has got a far greater degree of sway over where their banks lend, and they're trying to direct credit to the correct places, so to speak, so that they're trying to get credit where it's most needed. So this is why, despite appearing to be at odds, these two things are not quite opposed. They're not diametrically opposed as it might be if another central bank does it. But like you alluded to much earlier as well, this is one of those things where we're not entirely sure whether they keep shifting the goalposts, or it's just that their playing field is quite different to what we're used to.
Yeah. Now, and especially with the HNA story, where HNA was really an example of credit exuberance gone wrong, and that probably is symptomatic of some of the companies that they are trying to have greater control over in terms of squeezing the credit from companies like that. But let's move on to reflation, which has been really a key theme in recent weeks. Now, walk us through the impact that this will have on markets throughout Asia.
So for purposes of this discussion, let me define what reflation is as we discuss it. So it's commonly misunderstood, but reflation is essentially a policy or a set of policies. So monetary policy plus fiscal policy, the infusion of a lot of liquidity to try to get the economy back to where it was and to restore activity levels. So that's reflation in action. And you're right. So markets have come to not only have faith in policymakers, but also they become very expectant of it, anticipating more stimulus to come through, and that's causing reflation. What that it distills down to on the ground for the average person is that reflation, because it's supposed to resume activity, causes a lot of initial stocking up syndrome. So you want to stock up on your raw materials, your inventory, and this causes costs to go up. It can be logistics costs, things like freight, and it could also be the cost of commodities, so on and so forth. So what that does is initially it pushes up cost. The trouble is between reflation and a proper demand boom, where we are stuck is prices are quite sticky. You can't get prices to go higher at a very fast rate. So initially, it turns out to be a margin squeeze for businesses. For households, it may turn out to be an unintended erosion of disposable income. So that's what businesses on the ground feel. And for us here in Asia, as well as the wider emerging markets, the point about reflation is it brings US Treasury yields higher because you expect inflation to rise over the longer term. Long-term interest rates go up, and the yield curve steepens. These generally cause some, or at least increases the latent volatility of capital. So we may encounter more volatile markets. So what we get into is more volatile markets and rising costs. These may be the two things. They are both perhaps en route to getting better demand, but in the interim between now and then, they do entail some risks.
Thanks for that, Vishnu. Now, looking ahead now, because it is Chinese New Year and Asia comes back from the long Chinese New Year weekend on Monday. What events and data announcements should we be watching out for the week ahead in Asia?
But I think in Asia, we probably have the benefit of countries like China, Hong Kong, Taiwan, and even more extended break. So a lot of the China data may not be in focus. What we will get next week, in Singapore's case, you've got Singapore's budget. And then in the case of the wider region, you've got some more GDP data coming out in terms of Q4 GDP, so on and so forth. But suffice to say that markets at this point will not be watching data too closely, because a lot of the data are backward-looking data, putting aside Singapore budget, which is not data per se. So a lot of it will be backward-looking. What markets will be focusing on are two things. One is any headline risks around where market pricing is going in terms of yields, in terms of equity markets, so on and so forth. And the other one is any headline risks to do with policy, whether the fiscal stimulus in the US passes as it was hoped for, anything that the Fed says now that they are also anticipating, which was the good point you brought up, reflation. Does it change their view? So these are the headline risks that markets will be looking for as we, say, bid the red farewell and look forward to the ox.
Well, on that note, Vishnu, thank you very much for your insights. We've been speaking to Vishnu Varathan, Head of Economics and Strategy at Mizuho Bank, on the ASEAN Midday Market Watch. I'm Brian Fernandez. Check out www.biztech.asia for business and technology conversations.